Hello traders, Mandla here at FX Link. Thank you for joining me on our Sunday's market preview videos. In this week's video, we are going to talk about entries and exits. And I'm going to give you a few tips that I use in order for me to minimize my risk and potentially maximize my rewards. So keep your pen and paper ready and I'll see you on the chart. Aussie dollar on the daily time frame. My usual protocol is to look at the direction of the market and to see if I am going with the underlying trend. And as you see, the trend is down because the market starts from the top left of my screen and is at the bottom right of my screen. So since we are in a downtrend and we haven't broken through these resistant levels right here, I have no reason to be thinking bullish as of now. So since price has come to these resistant levels, it began to retrace back and give us a lower low, lower close, lower than this low, this previous low right here. And after giving us a lower low, lower close, so price gave us a retracement. After giving us a retracement, we have another pattern of a lower low, lower close. Why do I say this is a lower low, lower close? Well, as I take my horizontal line and put it back to our previous support, our latest previous support, you would notice that as I zoom in, okay, let me zoom in, you would notice that price, let me put it exactly right here. You would notice that price not only gave us a lower low with these wicks, it gave us a lower low, lower close as the bodies of these candles, these daily candles right here are lower than this low right here, which is often a sign from the market that it still wants to go lower, or at least it will retest these lows right here. Okay, since we have a sign that price will retest these lows right here, and it does have a potential to go lower and retest the next support and resistance levels, which are at 76.40s, then we might want to look for potential shorting opportunities. The first level I am looking at is where price is currently sitting at, which is this resistant level right here. Okay, why am I currently interested in this resistance level right here? As I take my horizontal line again, okay, to this resistance level, you would notice we have our resistance, okay, right here, another resistance coming off right here, double top, resistance again, and then price gave us support, and as we go back to the past, we see a similar pattern of support and resistance. Okay, now that we see this price level is quite significant, as I go to my lower time frame, you would notice that I will have a, excuse me, let me crunch this up. You would notice that from this swing high, this long-term swing high, to this outside return right here, I will have a 618 retracement coming exactly at these resistant levels right here. Okay, and then as I take my Fibonacci extension tool from this low right here and invert it back to this swing high, I will have a 1618 extension lining up at this 618 retracement. So this gives me a point, not actually point, a zone where I would want to potentially look for a selling opportunity at, which is right at this zone right here. Never forgetting that price could still do this come to these levels, then give us a lower load close, and actually continue off to retest these lows right here. Okay, so there are two levels I'm currently looking at. Let me largen this up. Okay, I'm looking at this level 2, which is at this 127 extension. Okay, now the question I have to answer is a question of risk to reward. What if I enter at this price point? What type of risk to reward will I have, and will I be able to afford it? Will I have a smaller risk to reward than I would have at this point? Okay, if you would potentially enter at this point, you would have to take your profits right here. Mainly, I like to measure my profits. I like to take my profits at a 382 retracement and a 618 retracement. So my first targets would come off at this 382 retracement, which would be right here. So if you measure out your risk to reward, stops have to be probably, if you put a 10 pip stop or ATR stop base, that would actually put you somewhere at 45 pips. So this risk to reward, if you enter at that 127 extension, you would have a 1:1 risk to reward for first targets, and second targets, for second targets you would have a 1.7:1 risk to reward, which is not too bad. Okay, but I am mainly looking for price to come over to this Fibonacci confluence level, which is at this 618 retracement and at this 1618 extension over to these resistant levels right here at 78.80s. Okay, why do I say that? Well, my risk will be shorter, okay, and my reward will be prolonged. Why? As I take my Fibonacci extension retracement, put it there. This is mainly for projections, guys. Okay, my 32 would be right here, and my target, my stops would be 10 pips or 12 pips above. So I would be risking 22 to 24 pips worth of risk in this one, and I'll be having a potential reward of 65 pips for first targets. On the first scenario, we had a potential reward of a 1:1 risk to reward, but on this one it gives us a 1:2.6 risk to reward, which means that you have double your risk on this particular trade, and this accounts for first take profits. And for second take profits, you would have a 1:4 risk to reward. First point, this is a much more favorable risk to reward on this one. Okay, so targets, my stops would be somewhere 29 to 30 pips. Okay, another thing is I like to
put my entries where the masses put their stops.
Just like Dr. David Paul, I like to put my entries where the masses would usually put their stops. So in this particular trading scenario, okay, in this scenario, if you want to get short, let me take these off, take everything off. Okay, in this scenario, if you want to get short, mainly your stops have to be higher than this high, and a couple of ticks higher than this high. Okay, have you ever had a scenario where you get stopped out and price eventually goes to your target? This is what happens. If you take David Paul's advice, you would want to take your entries and put your entries where the masses put their stops. So I mainly like to put my entries where exactly at the resistance levels, a couple of ticks down, then have much wider stops, so I could have a certainty that if price breaks those levels, then I was particularly wrong on that particular trade. Okay, so the main setup I would want to look at is I would want for price to come over to these resistance levels, give us a top, retrace for a little bit, then retest, and on our RSI give us a bearish divergence, and I would enter next bar market on a lower close, okay, with this particular risk to reward of a 1:4 or 1:3. All right, taking a recap on the trade that we waited for since last week. Okay, you are Aussie. Well, I'd like to update you, and mainly we wanted to take a long opportunity right here, but as you see, our setup wasn't met. Okay, so our next level of support come over to these levels, and you see price is near, so I'll be looking for a potential buying opportunity with that exact same scenario to be met for my entries to be fulfilled. I'll be looking for a support, okay, then a retest of those support levels, a bullish divergence on my RSI, and I would enter on a high close with this particular risk toward a potential 153 pips to be caught, and a risk of a 42 pip stop loss over right there. So as you see on our RSI, we are oversold, so hopefully price will get there. If it doesn't, then it didn't. That's part of trading.